All right, so this is the live recording for the 5th of November, 2025. It is currently, it's either Tuesday or Wednesday. It's Wednesday because we got to review Tuesday as well. Coming off a very productive session, a career day for me, P&L wise, execution wise, did very well as well. And I'll be reviewing the past two sessions and kind of comparing and contrasting both. Kind of tough because both sessions are very similar, but they were also unique in their own sense. And we'll be talking about that. So, yeah, in terms of starting off with Tuesday, coming into yesterday's session, right, we had a pretty clear bias that you see me post, I believe, if I'm not mistaken. Was this Monday or Tuesday? I ended up posting this. Actually, we didn't end up posting a game plan for Tuesday, but essentially, I remember vividly. I had a short bias coming into the open, and just kind of referencing, what do you call it, NQ and ES here as we take a look at it. Essentially, coming into Tuesday's open, what I was more so referencing was higher time frame narrative. Today, in terms of Wednesday, right, today's session, as we're recording this, it was a bit more tough because we didn't have as much in terms of PD arrays through higher time frame and base off, or any internal range of liquidity, external range of liquidity, any areas of significance that we typically utilize to sway our bias. We didn't have that necessarily today. All we had was a 4-hour BPR, bearish BPR on ES, which we used towards our advantage. We'll talk about that later. But in terms of coming into today, or coming into Tuesday, I was more so referencing overnight data in junction with the sell that we had the previous session. So if you guys reference Monday, we had seen Monday essentially close out very bearish, and through price overnight Monday into Tuesday, price was also very bearish. So kind of utilizing both. In terms of price and momentum, the great thing for us scalpers is that we trade the heaviest leverage of the market. So for us, a momentum price action, it means a lot to us, right? For swing traders, not necessarily, but for us specifically, scalpers typically like to ride sentiment. We like to ride trend. We obviously have our pivot trades, but we more so like to ride sentiment. And so more so what I utilized for my bias in terms of identifying higher time frame wise coming into yesterday was utilizing the previous session's close and how we traded. Usually I won't use that, but being how aggressive we were the previous session, I use that injunction in alignment with more so what we did overnight last night as well, in terms of Monday night coming into Tuesday. And we saw both correlations were very bearish, utilizing ETH and RTH. And what we're able to see is price is more so building down coming into the open. And so for me, right, as we trade upside chat, as we had our bias coming into Monday morning, as we had for the majority of last week, when you see sentiment so strong here, especially, for example, the Sunday night into Monday morning, when you see price so bullish, there's no indication for me to more so look to completely flip narrative. At this point in time, if my bias higher time frame is not extremely clear, at minimum, what I'll do is I'll more so look to favor sentiment, if that makes sense. So if I'm 50-50 higher time frame, like for example, you look at Tuesday, you see price more so trade down through Monday close, going into close, and then you see overnight price trade very aggressively towards the downside. What my sentiment higher time frame is coming into the AM part of the session at minimum is bearish. The reason being, I'm not utilizing set major liquidity here. I'm not looking at a significant higher low being put in chat. If we're being honest, when we set an all-time highs, sure, they're obviously significant, but there's typically nothing we could work off that because there's no major previous previous data in terms of price that we could work off there, right? Usually, when we put in a significant high, anything under all-time high, it usually works a bit different. But being that we're at all-time high, everything up here was psychological levels, right? And so once we install that, we more so referenced higher time frame narrative, just as we do lower time frame in terms of identifying what sentiment is at, as in what does price want to do. And you see price consistently after putting in its all-time high, setting in lower highs, right? We put in a lower high from here, put in a lower high from here, and so on forth, right? So for me, naturally, I was swaying towards that downside bias because we had seen higher time frame narrative more so point towards downside, especially being the fact that we had seen price through that Monday sell trade aggressively towards the downside. If that makes sense. So we had that Monday close, Tuesday overnight data coming into the open. We had seen, right, we could have potentially SMT'd here, right, utilizing internal range of liquidity. We had an internal low here and an internal low here. We had originally SMT'd through ES and NQ here, right, off that same low on the hourly. But what you then see price do after initially SMTing off the low, right, we see the SMT here, build back up. You then see price come right back down after creating a lower high. Therefore, more so advocating for potential lower interest, right? The only bullish indication that you had off this internal low here, higher time frame wise, was this SMT, was this low that we put in. Once that violates, that's clearly an obvious indication, in my opinion, where price most likely will look to trade downside. And now, so for me specifically coming into the open, I was more so watching and referencing the open in terms of the opening range move. Clearly, we had seen price off the open here trade very bullish, but after identifying that obviously Monday close and overnight price coming into this open was very bearish, what I was more so looking at in terms of referencing wise was more so utilizing a higher time frame PD array where we could see price tap into, fulfill the inefficiency, and reject. And that's exactly what we saw here, a perfect imbalance that got rebounced off the 1 hour time frame. And as you guys know, two of the biggest components that we end up utilizing consistently to identify what gaps are the best to utilize, because you guys know, obviously, with fair value gaps, with inversions, there's typically so much noise in the market. For us specifically, what we end up doing a lot of times is utilizing two main components, a gap that's displacive and a gap that also takes liquidity. If you reference NQ here, what do? This gap's displacive, definitely more displacive than almost any gap created off this sell. And two, a gap that took liquidity being this internal low. So this was a significant area of interest, this hourly gap, where I felt price through the reaction in that gap, whether it's us respecting and rejecting or disrespecting and seeing an inversion sequence back up, whatever we did here would alter my AM bias in terms of the hourly time frame. And so we then end up seeing price create that opening range move. We then see price stall out and come into that hourly gap where we then see price ultimately reject back down. From there on out, my interest in taking this trade was through this 5-minute inversion. My thesis was, okay, higher time frame we identified was bearish. Now, what's important in terms of also identifying higher time frame wise is the timing aspect of when you expect price to more so seek the move that you're looking for. So for example, we're bearish Tuesday morning after identifying higher time frame, after identifying overnight sell, coming into the open. What we then see price do is we see price tap that hourly, and then we see price come down. From there on out, it's more so, okay, I'm thinking to myself, when can I expect price to now sell for further sell side and further continuation towards the downside, as that's what we're expecting. And so for us, just as we use on the hourly time frame with this significant 1 hour PD array, we ended up utilizing that same ideology through the 5-minute time frame for our entry model. We referenced a 5-minute gap, which was very displacive, one of the most displacive gaps through the entire session. And B, right, number two, a gap that ends up taking liquidity. So this 5-minute gap takes lead on highs, which prones our opening range move. And then we also see this 5-minute gap be nice and displacive. So for me, in my belief, lower time frame wise, at minimum, had we not taken a position here, this is a good area to base bias off. So we see that 1 hour rejection off that hourly time frame. But then we also see price come down here. And in multi-time frame alignment, we see price come down here and we see price invert this 5-minute time frame, right? 5-minute gap, 5-minute bullish PD array, which turns a bearish inversion fair value gap, right? You see that happen, and in alignment, right, with higher time frame, you see price come down and validate more so what you're looking for. Not only higher time frame now through the hourly rejection, but also lower time frame. Then from there on out, it was simply an entry model trade, right? We had taken our 1-minute confirmation sequence, obviously utilizing our model stop, which was the 5-minute candle wick high, obviously. And the reason you see me use this high or use the model stop off this trade as opposed to other trades that we have sometimes, specifically the 1-minute time frame, where I utilize like a swing low or a swing high, is because I want to give that trade breathing room. This model stop here, I felt give the trade enough breathing room. And a good point of invalidation had we seen that, right? Had we seen price come back up here after inverting on the 1-minute time frame and trading back up above highs, we most likely then go to that hourly gap again and look to possibly invert it. But since we had seen price go off the hourly and reject here, we then see price go invert off the 5-minute time frame, where our confirmation sequence in terms of a confirmation candle was exactly at 10:56 a.m. Eastern Standard Time. We then end up taking our entry through there, and our risk is more so defined, where we have our model stop being the wick high off the 5-minute fair value gap, and then we're simply looking to simply target our lows for the session, right? Like we talked about, we had that bearish narrative. All we did on the hourly time frame here, chat, if you like reference this, right, is we tapped the hourly gap, rejected, and all we're now looking for is for our relative lows, right? Chat, you mitigate the fact that this is an hourly time frame chart. Imagine this is a 1-minute time frame, chat. 1-minute gap reject, good sell, candle back down. What do you look for? You at least look for swing lows. It's fractal. If you don't know what fractal means, every time frame operates the same way. That's my ideology. That's how I reference it. I reference time frames the same way every single time. So Chad, you mitigate this being an hourly time frame. You again reference this as a one minute time frame. This rejection here, ideally a 1-minute rejection candle here, especially with your thesis being lower originally, a 1-minute rejection candle. This is simply a continuation model, right? Imagine this is a 1 minute time frame. This is simply a continuation model for you riding lower. And all we did when it came to NQ here was look for our swing lows, right? Looking at our low of day through London, right? That's all we did. And so that's why you see me reference my take profit one being London low. You could have done New York lows, but you see me reference that, and then we ultimately end up seeing prices more so see continuation. Right? Why? Because all this was a higher time frame continuation model, more so look. And all we had here was a fractal alignment, multi-time frame alignment, with our 5 minute entry, right, being the inversion fair value gap. That's all what yesterday was. The beauty about yesterday was actually pretty rangy, or it was pretty slow. So we ended up capitalizing with the move of the day. The beauty with how we trade, chat, is no matter how conditions are, and obviously we're a big advocate of price action, no matter how conditions are, typically our risk parameters give our trade enough breathing room to where we don't, prematurely get wicked out prior to validation. That's why most times you'll see us catch big moves and we might not be up, a 10R plus, but what we're looking for more so is probability. And so when you set a bit wider stops and give your trade the possibility to breathe a bit more, your probability typically jumps up more. So, that was more so yesterday. That's kind of it broken down, higher time frame. And so proceeding into today, coming into today's session, it was kind of a bit more hard because, again, you referenced the hourly time frame. You see how we had higher time frame narrative and higher time frame PDA arrays to work off. What we're able to more so identify through yesterday is we had an hourly gap to work off to look to seek lower. But from coming into New York, we didn't necessarily really have that much. We did have a couple hourly gaps here, but coming into the New York Open that we more so referenced or traded, the only hourly gap that we had was here. And aside from that, there was really nothing to work off here. So higher time frame wise, I was a bit more so neutral. Our opening range move here developed at around 9:45 a.m., which was at around 6:03 at price. And again, you go to the hourly at 6:03 at this point in time. We did have a 4-hour fair value gap fill, right, which was kind of a scuffed one, to be honest. But what you're more so referencing here is the opening range move to more so get you your bias overall. Again, utilizing the same kind of thesis that we had through yesterday. And again, I'll say this again, chat. We are scalp traders. We're not swing traders. We're not looking for pivotal moves. We're not looking to anticipate what price is going to do. We're not looking for complete reversal. There's some traders that do that. Obviously, that's fair. We still take our MSS trades. What we're doing most of the time is we're more so building off what data has already told us and more so building bias furthermore. So you see with yesterday, with Tuesday, you see the sell off higher time frame through Monday into overnight, which is also bearish. What you then see price do is you see Asia initially sell, meeting this 1 day fair value gap fill, I believe. Yeah, we filled a 1 day fair value gap, but then what you see price do overnight is you see price build structure, and then you see price end up trading back up towards the upside. And so coming into the open, right, if you just more so look at overnight price, you see ever since the initial sell, we built structure and we saw a good MSS move back up. Again, fractal alignment, as in every time frame operates the same way. You see the MSS move off the daily fair value gap fill, the inefficiency filled, and then you see price more so come back up, and you see price more so showcase interest and potentially trading higher. Once we got our opening range move, right, at 9:45 a.m., once we got this candle here specifically at 9:50 a.m., I knew interest was most likely going to be upside. The only reason I didn't have a set game plan out or set buys for out through the open was because we didn't have that decisive opening range move to start the day yet. But once we saw price reclaim above these Asia highs, once we saw price reclaim into this hourly gap, I felt bias was more so higher, at least lower time frame wise. And again, for us scalpers, our mindset is 1-0, right? We have the mindset and the fixation of going 1-0, right? In terms of compounding, we don't look for the biggest moves of the day. No, if they happen naturally through our risk parameters. What we're looking for is compounds. And so for us, it's more so a timing alignment here through scalping, 1 minute time frame, 5 minute time frame. And so for us, what we're looking for us to do here is to more so capitalize off a continuation trade, riding up higher into our next couple buy-side liquidity ranges, right? If that makes sense. So again, yesterday was more so an MSS trade through intra New York. Through higher time frame, it was more so a continuation model. Through lower time frame, and it was an MSS model because we were essentially shorting the first invalidated bullish gap through highs in New York. With today, it was continuation, right, through lower time frame because we had already seen our opening range move in conjunction with overnight price being bullish and our opening range move. That caused me to be bullish naturally. I wouldn't say it's A plus because there wasn't any higher time frame gap to work off or any higher time frame liquidity to work off. But for me specifically, I found interest in potentially going long off this 5 minute and 1 minute gap had we held its how do we balance off the gap, right? So again, we had our opening range move. We then see price retrace, and we see price offer a retracement inside of a 1 minute fair value gap, a bullish fair value gap, and also a 5 minute bullish fair value gap. And so from there on out, utilizing our bias and recognizing, okay, we're bullish overnight, we're bullish off the opening range move. Price most likely is at the point right now where momentum is favoring towards upside, right? Because typically, sometimes you'll see opens trade very choppy, but the way you identify momentum is how price trades off the opening range move right here. So how we see price take a let on high out, come back down and chop, 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 kind of like how we did a little bit through yesterday. You're not seeing me spark interest at all here until we see price start to pick up. You see price to start to pick up, and so from here on out, it was simply a retracement that we were looking for. For this trade, we simply kept our stops a 1 minute wick low. We didn't end up using a model stop off this trade. I felt we could have used this swing low a little bit more because it would have given the trade a bit more breathing room. And again, you see that help towards our advantage, right? You see us take our entry through our confirmation sequence, being an engulfing pattern, right, or engulfing candle at 10:05 a.m. You then see price come down, and you see price tap the 5 minute gap. Where on the 1 minute time frame, you at one point in time you see price trade below the 5 minute gap, but then you see price come right back up. And the good thing about the stops that we end up using is instead of utilizing a stop right at the bottom of the fair value gap, which a lot of traders do, you would have gotten wicked out here, by the way. We end up using a stop, which gives the trade a bit more breathing room. In the case that it does want to potentially wick, it gives it a bit more breathing room. You then see price ultimately just consolidate. This is just a state of consolidation, ideally. This is just a state of consolidation, ideally. I'm getting spam called right now, chat, by the way. I'm just a little distracted. Bad price, but then you see price ultimately come back up, and you see price advocate for that higher interest. We were very choppy, but again, chat, this doesn't really alter anything. We just simply kept our risk the way it was, and cut this trade how it was. We then simply, rode above 728 eventually, then eventually hit our target one interest of 796, then eventually just slowly grinded up through New York and ended up closing our stops at a trailed stop at around 796. So that was pretty much that. Hopefully that makes sense, but that was kind of a detailed explanation. All right. Let's get to the questions here. Okay. Let me actually do Q&As first. Can you come up with a plan to show us how to start from scratch, accomplish 100? That's a bit tough. Because 100K bucks a lot of money. It'd have to be a very detailed plan. If I did do one, it would take up the majority of this review. So I don't think I can answer that. I could maybe have a video or a select section on that in the future in terms of how to scale up, ideally, but I don't have a specific game plan. I can't think of something on the top of my head because everyone's unique, so chat, give me 1 sec. Sorry, chat. It's got fucking stupid phone calls, bro, in the middle of work, bro. Anyways, I hate that shit. I'm gonna go on DND, bro. I swear to God. The shit's from last month. Somebody took and asked you about it. Can't recall exactly the day, but what did you mean that it looks good from a pattern standpoint, and how do you identify that this is consolidation rather than just bullish reversal? Also, what do you mean by randomize low? Have I ever said that? Really still trying to understand when it's time to play MSS, or if it's just a retracement sequence to continue the trend. Yeah, so here's a good first initial response. When it comes to identifying market structure shift reversals, you have to realize there's only one MSS a day, if it even gives. There's some days, chat, where we just bleed one direction the whole day. When it comes to MSS trades, there's only one reversal the whole entire time. So the hard part about MSS trades is, here's the pro and the con. The pro with an MSS trade is that your R to R jumps up naturally. It's a lot better, ideally, by default, because you're taking more so a pivotal trade. But the probability is a lot harder to time, right? Because you only have one reversal a day, right? Any other time you think a reversal is happening, that's typically a fake out. You typically have one reversal in the market, so it's very hard to do that. So for me specifically, when it comes to identifying a reversal in the market, there's two main significant things. It's a major significant low that we have to take out, and it's also massive price displays through the low. So we kind of talked about this a couple of days ago through Monday, I believe, in the review. If you guys watched that, in identifying a low that we put in, and we were bearish, but once we had seen price hold the gap, we then looked to flip narrative. The reason you still see me have a bear bias off a low that we put in looking for a pivot and then look to flip bullish is because we had to put in a significant low and then we eventually had seen price pick up in data. What you see off this example here is through the trade that I ended up taking here in terms of alert wise is you see price not put in a significant low. We end up tapping a PD array, but that's not a significant low. That's not a definitive low, an area of interest where we take liquidity, and then we see price more so shift back up, right? And also on top of that, right, although the displacement is nice here, we don't see a massive market structure shift reversal as we're still creating lower highs, right? So at the point of the high, off this 5-minute inversion, you don't see price put in a higher high, if that makes sense. You see price still put in a lower high. So in terms of identifying an MSS trade, and we have stuff on this as well, it's more so it has to be significant low in the market. You have to be very picky when it comes to reversal trades. And that's what you see with me, chat. Anytime we have a reversal trade, I am very picky, right? Very picky. Because there is only one reversal in the market a day. That's the reality. Anything that you take elsewise is a continuation model typically, right? So that's it. Identifying a significant low that we end up putting out, which we did not end up doing here. And on top of that, right, I was zoomed in here, but I'm pretty sure if you go back to that date and you look at the chart overall, look at how much we sold all the way back down here before end up seeking this retracement, right? The sole thing that differs a retracement as opposed to a reversal, again, a retracement, there's no significant low being put in, A, and then B, there's no massive displays invalidating consecutive PD arrays. With MSS moves, there's a massive low, and then B, obviously there's massive displacement, more so looking to override the initial direction lower, if that makes sense. Hello, please can you explain the target? 25,786 today's trade. It honestly just looks like a random 15-minute swing. It pretty much was a swing high. If you look at the hourly time frame through the trade that they ended up taking through NQ, we couldn't really base off much data. So you look at the hourly, there's no array to base off in terms of TP. If you look at the 30-minute, there's no array to base off TP. If you look at the 15-minute, there's no array to base off TP. So for me, essentially what I did is I utilized the swing high. So these wick highs I ended up utilizing as an area of interest where we can see price go. Again, this right here is a bit better in 796. This was a beautiful high. This is actually where we ended up taking out profit because this was a clear, decisive swing high where we ended up putting a lower high before trading lower. What you're more so looking to do here, chat, anytime I typically base my take profits off higher time frame narrative in terms of a higher time frame PD array or an external range liquidity area of interest or an internal range liquidity. But if we don't have any of that, like we didn't have today, what you'll see me more so do is utilize swing highs because these at one point in time were lower highs, right? And so if you're seeing price reverse coming up and disrespecting these lower highs that we developed, you're also seeing price disrespect the sell that we ended up coming back down, or that we ended up seeing down initially, if that makes sense. So when you see reversal in the market, essentially what you're doing, as we did today, is you initially see us go, the market goes short, and then as the market flips, what you're looking for price to do is invalidate, right, these previous swing highs that we end up looking at, right? These lower highs that we end up formulating. And so for me specifically, at worst comes to worst, if we don't have any data to work off higher time frame, I'll just simply utilize these swing pivot highs as areas of interest where we could look to take profit, right? Because at any point in time, we could see price come up and we could see price seek a rejection off a pivot high like this. These lower highs here would become targets of interest for our longs here back up. So we initially go short here, ride lower, but then on the flip side back up as we go long. What we're looking more so to do is take partials or take trims or take profit at areas of interest where we feel price could more so pivot off. And these lower highs here are obviously significant areas of interest. So you see me market that. And again, it wasn't the best take profit, not at all, but this is the best we could work off intraday, in my opinion. So when we are live, can you go through the time frames and your narrative why you're looking at this trade as we only see mostly your entry model. Also on the strategy channel, can you update with your new refinements as not much has been done to these channels since inception? I mean, you could say that in terms of the strategy channel, but that's because we've shifted everything towards the education section, right? We have a resource channel, a resource section where everything's just based off here. I don't post anything on that channel aside from strategy videos, which is just one time a year, if that. everything we end up having is in here, right? Whether it's through here, through our class recordings, through our trade recaps, through our live streams in general, right? We have different ways of how we go about this. Just because some channels are not updated frequently doesn't mean as if like I'm abandoning them. No, it's because some channels are only meant to be posted a few times. Leto, would you say you have two models, trend continuation or trend with continuation, range with rage and without inversion? I have two models as in this. I have a market structure shift model where I'm looking for a pivot reversal, or I have a continuation model, right? Those go hand in hand. Typically, you'll typically always have a reversal, and then as we continue, you ride continuation. Then I have two entries on both. I can have an MSS pivot trade where it's a fair value gap entry, or it's an inversion entry. Typically, most times now it's inversion entries. Continuation trades, I'm more so looking for fair value gap entries or inversion entries. Today was a fair value gap entry. If you guys look at yesterday specifically, right, yesterday was an MSS 5-minute inversion fair value gap entry through lower time frame narrative. Through lower time frame narrative today, we had a continuation model fair value gap entry. So that's what we more so utilize. So we have two different ways we trade the market with two different entries, if that makes sense. It just gives you versatility in the market, more adaptability, if that makes sense. My question is regarding the trend model. Would you say the best presentation for the trend is it FEG or BPR that holds? I think both go hand in hand. It really depends, but it always utilize gaps that are A, displacive, and B, gaps that take liquidity. It doesn't have to be both all the time, but if it is both, typically those type of gaps outweigh all the other noise in the market. That's what I would do. And the reason you see me utilize BPRs a lot is because typically BPRs have good gaps and they have two confluences in one. And so if, say, we're trying to, ride a continuation trade towards the upside and we see a bearish BPR get invalidated, that's typically a good indication that we'll see continuation towards higher. If that makes sense. Just for an example, when trading all-time high, go buy increments of 25 points. Yeah, usually if it's NQ, 10, 25, 50, 100. If it's ES, I go buy fives. What's your entry on the Asia trade, bro? I'll go over the Asia trade in a separate video I'll have out. That's completely different. But I'll go over that as well. I'll have that out maybe tomorrow. I gotta get some sleep after this, but yeah, I'll probably have that out at some point in time. I'm just going over it. Yeah. Matthew, could you recap of why you weren't expecting New York to hit overnight lows versus reversal activity? I might have just missed what you talked about. Yeah, we kind of answered in the review, but essentially it's just overnight data and through the opening range move here as well. We had seen price put in a significant low. Again, I believed in having interest in higher, mainly because we had put in a significant low, being this daily gap fill, right? We had a one-day gap fill. And on top of that, we had seen price structure and change back up. As we always talk about, chat, like we talked about earlier, right? Two biggest ways of advocate or recognizing reversal as opposed to a retracement is the low that we put in and the type of displace that we get off the low. And you see off here, right, as opposed to the example, right, that someone asked earlier, right here, what do you see the difference in here, right? The difference here is you don't see a significant low and you don't see massive displacement towards the upside. What you see here is a significant low and you see massive displacement towards the upside, right? So coming into this open, I wouldn't say I would have been extremely bullish here, but especially coming into the open through New York after data has given us enough info through the opening range move here being bullish, right? Once we had that in alignment, it pretty much confirmed my more so outlook in terms of AM at least. So it's very hard to find a single fair value gap that holds instead of a BPR that holds. But I noticed your trend model, especially after news, has a characteristic. But what are the key components for the single FEG to hold? I saw a higher time frame narrative with the 4-hour swing low of continuation overnight. It's very clear. Yeah, for me specifically, again, it's just a gap that's displacive or a gap that takes liquidity. And so you see the gap that they end up referencing. A good thing that I also end up utilizing as well a lot of times, if you have a multi-time frame alignment setup, as in like a 5-minute gap and a 1-minute gap inside the same zone, that's also a very good setup in my opinion. Right, the more confluence off an area of interest, the better, in my opinion. And so you see a 5-minute PD rate that we end up utilizing as an entry model alongside a 1-minute fair value gap, which we ended up utilizing as an entry model as well. So we kind of utilize both. I will say, had we just simply had this 1-minute gap alone, the probability, chat, of me taking a trade off this 1-minute gap alone is not likely because it's not massively displacive, nor did it take liquidity. But being that you had this 5-minute gap, right, which, is obviously a lot more displacive of a gap, and it's a gap that also just came off its previous gap taking liquidity, I find interest in potentially putting risk on here, right, if that makes sense. And that's obviously in junction and in alignment with the fact that we had already been bullish through the open. Had we been neutral buys here at this point in time, you most likely don't see me end up taking this trade. But being that I was bullish, at least short term here, I thought that we could have, taken risk off here. So a good entry model, right? identifying bias and draw, and also recognizing price, right? The three main components. Um, with daylight savings, do you adjust the time on your kill zone indicator? Actually, I haven't, honestly. I think it's still 3 a.m. opens, right? Or 3 a.m. For London. I'm not sure. I'll adjust it if I need to. Um, what's your average trade hold time? I don't know. It varies day to day, honestly. Some days it's very choppy and we'll have to hold for a minute. Some days it's very easy. There's days, you guys know if you've been in here for a little while, there's days where we come in and within the span of like 30 minutes to an hour, we're off the charts because we already capitalized our trade. And then there's some days like today where we end up holding the trade the entirety of the session. My job as a trader, my job as a teacher for you guys is to make sure I'm here for the whole entire thing, whether it's a trade that we end up catching and hitting TP in 15 minutes or whether it takes, 5 hours, right? Just like how we kind of had today. My job is to make sure I'm on live. My job is to make sure I have these trade recaps, these live reviews, these class videos, all these different things that we do. My job is to make sure that you guys understand it full circle. That's the whole idea. Everything, right? Everything. So, yeah, it varies day to day. Usually, if markets are typically very good and our timing is good, we're done within an hour or two, if that. But some days price is just slower overall. It's not like the trade's bad. It's just price is slow. Does this work on gold and other? Yeah, it does. I've kind of backtested on gold a bit. It does. It works well. Just make sure gold has a good liquidity, right? You can't. It's like Asia. Some nights on NQ and ES chat. If Asia, there's days where Asia is very choppy through NQ with some nights. Like you're not gonna have high probability in conditions that are just pure chop. Just make sure if you're trading gold's trading at a good state of price action. Could you write your strategy on a napkin? If so, what would it say? Also, if you're to describe your strategy to a 5-year-old, how would you do it? That's a freaking question. Could you write your strategy on a napkin? Okay, yeah. I'll say it in words. I was gonna type it out. I'll just say it in words. Okay, so that's what I would do. I would type out in bold text strategy or model, and then colon, and then number 1, identify price action. Number 2, identify bias and draw. Number 3, identify entry model. And then in quotations, I would have number 3 for entry model as in timing. And number 2 for draw and liquidity in quotations, I would have anticipation. And then in number 1 for price action in quotations, I would have reaction. So you see all 3, right? Reaction, anticipation, and I forgot what I said for the third thing. My brain's lost. Anticipation, reaction, and why am I blanking out here? I forgot what I said for the third thing for price. But you have those 3 different components. And so there's 3 main components of my strategy. Again, when we talk about this, 3 components: identifying price action, identifying what bias and draw is, and identifying an entry model, right? Number 3 is timing. Number 2 is anticipation. Number 1 is reacting. That's it. Simple as that, if that makes sense. When you say massive displacement off a major high or low, would you say a minimum of 5 or 500 displacement gaps? No, not necessarily. It could just be 1 or 2 gaps. It could be either or. It could be a 5-minute or a 1 minute, as long as the gap's displacive, right? As in like a big moving gap. A gap where you look at the market in hindsight reflecting back, and you're like, oh yeah, that was a pretty big gap, right? In relative to the rest of the session, if that makes sense. That's how I view it. Yeah, this is crazy, bro. I don't even, Mr. T, I don't even, like, chat, I'm not a big guy of, like, when it comes to, like, manifesting and stuff. Like, this is actually just insane. I promise you, like, there is no tie to this at all. You guys know this. Like, I posted this last week. Like, and then a week later, this happens. It's crazy. It's just, obviously, you got to work hard, but it's crazy what you could do in life, so. All right. I'm not gonna lie, your stops make me sick to my stomach. 40, 50 point stops is crazy. I mean, that's true, but our TPs are also 100+ points, right? We were in a trade today where our stop was, I don't know how much it was. But like a day like today, or like yesterday, for example, for NQ's trade, we ended up taking this trade and our fills around 774. Our stops all the way up to 854, which is about a 70-point stop. But then you look at our TP1. Our TP1 is about 130 points. So stop size doesn't matter. I think that's what people need to learn. Chat, is the amount of points on your trade doesn't matter unless you trade like fucking. If your full size is 1 micro, so your stop size doesn't matter, right? You just size and relative. That's why whenever you guys see me alert a trade, I go based off R, because that's the most transparent and best way I can alert a trade for you guys. Because you guys are not going to make the same exact money as I do every single day. Like, chat, like, 500K today, like, chat, there's maybe a handful of people in this industry who have had a day like this ever. And I'm not trying to like it's just we're at different chapters, right? Different points. And so when I alert based off R, it's in relative, right? It aligns perfectly. And so yeah, a bigger stop, and obviously it could be, you could look at that and be like, holy shit. But again, our take profits are bigger. If the R makes sense, stop size doesn't matter. Just size and relative, if that makes sense. Say your risk is $1,000. If you have a 50-point stop, one mini is about $20 per point. That's about $1,000 of risk, right, on that trade. But then say, we have days where price is less volatile and our stop's 20 points and you risk $1,000 per point. You're sizing what's the math on that? Like 2-3 minis, or 15, 20 micros, I think, or about 25 micros. So it doesn't matter. It doesn't really matter. Do I have pyramid to trade? I'll pyramid in Asia sometimes if I believe we'll see a good reversal. But through New York, never. New York, I always have one entry. Typically, one entry only. All right, y'all. I'm gonna wrap it up here. A good freaking review, kind of like a mini class. If you guys have further questions, you guys could drop it in there. We will have our class sometime later this week as well, which is good. But a good freaking review, kind of going over the last 2 days. Beautiful fucking work chat. We'll be live tomorrow. I'm gonna go catch some sleep. I'll talk to you guys at night. And yeah.